Hey guys, welcome back to another episode. Yesterday was a pretty red day. I believe it's probably one of the worst red days I've seen in the past few months that I can remember, and one that affected pretty much the whole market. Right? Normally we only see it affecting like small growth companies or upcoming growth stocks. But yesterday, we even saw some of the giants down some nice single digits. So in today's episode, I want to take a quick look at those giants. We're going to take a quick look at Amazon, at Apple, at Netflix, and at Microsoft. The other ones, the other part of FANG, I have done numerous episodes on, so I didn't want to touch those today, but check out my Saturday or Sunday video where I mentioned the remaining two. So what I want to do is take a quick look at recent news affecting all these companies. We're also going to take a quick look at valuation metrics. We're also going to look at technicals. And I'm just going to share my overall thoughts. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, and check out the pinned comment for 10 free stock ideas you can get right now. So let's get started. So Amazon yesterday dropped about 2.73% on the day. That is insane, right? I believe something as I understand if huge growth stocks, right, ones that are barely profitable, that are barely positive in cash flow from operations, we see some strong single-digit declines. But a company as big as Amazon dropping almost 3% in one day is definitely something to keep an eye out. So right now, Amazon currently has a market cap of $1.6 trillion. Some of the things that I am excited about Amazon are right now, right, we're kind of getting into the holiday season. Holiday season is coming. Amazon actually released that they are going to do their Black Friday deals a lot earlier than ever. They're starting today. So that's a month and a half earlier, which I think it's pretty insane. But and I think eventually the Black Friday is going to no longer be a thing if all these stores just start doing the deals months and months in advance. So we can see, right, that's one thing with kind of holiday seasons coming up. We got Thanksgiving, we got Christmas, we have all types of holidays during November and December. I do believe Amazon is going to see a huge influx in orders. Normally that's what happens in quarter 3 and quarter 4. Another thing that I'm super excited about Amazon is they've kind of done this numerous years, but I feel like now is the first time they're really kind of showing its strength, and that is the sponsor tabs here on their website. So for example, I did something simple like look up plastic spoons. The first 1, 2, 3, 4, 5, 6 items were sponsored deals, and this is some form of advertisement deal on their end. So I believe this is going to help them out during this upcoming quarter as well. So I believe we're going to see some strong growth in Amazon. If we take a look at their most recent earnings, which they reported in July, you can see, right, net sales in the trailing 12 months, 60% comes from North America, about 28% comes from international region, and about 12% comes from AWS.
Do you want 10 free stock picks right now? Well, if you do, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Stock Advisor has beat the market by more than 4x. Go to fool.com/Jose to get your free 10 stock picks now. If we take a look at the actual net sales growth in North America, it grew 22% compared to the same time last year. We can look at here, right? Quarter 4 always tends to be the strongest quarter. Quarter 3 tends to be the second strongest quarter of the year. All right, so we're coming in with quarter 3. I believe we're going to see strong growth there. And then quarter 4 is also going to show some strong numbers with the holidays. So net sales were up 22%. Operating income was up 47%. If we take a look at their international region, same thing, right? Quarter 4 holidays and quarter 3 tend to be the strongest. Quarter 4 always the strongest. Net sales were up 36%, and operating income were up 5%. And if we take a look at the AWS is the only segment that I don't want to say is quarter cyclical. This one is one that hopefully just keeps growing in a straight line from time to time, right? So net sales were up 37% year over year, and it was also up quarter over quarter. We can see, right, operating income was also up 25% year over year. And this is the cool thing about AWS. I'm pretty sure most of you know it, but AWS, their clouding service, their web services, this is where they make most of
even though it's the smallest portion of the company's net sales, is one of the biggest when it comes to operating income. Like, the second company we're going to take a quick look at is Apple, and Apple was down 2.46%. Apple, very similar, right? We have the holiday seasons coming up, which is definitely going to help out. I do want to say one of the negativity with Apple right now is there has been a nice amount of delays due to the overall chip shortage and overall other shortages out there right now that is affecting, for example, their iPhone 13 delivery times. And unfortunately, that's the last thing you want to hear, especially during the holiday seasons, right? This is when people go out there and start to pre-order their phones, start to get things on deals due to Black Friday and everything else. So with the chip shortage, I believe it's creating some form of bearish sentiment towards investors. We can see the stock price drop 2% today, and we can see from its 52-week high, the stock is actually down 11.2%. So I want to say that's definitely going to be affecting the stock, and I believe investors should definitely keep an eye on to see how kind of production is kind of moving along. If any of you guys have the iPhone 13 on pre-order, let us know in the comments below if it's taking a little bit longer than usual. Reports are saying yes, but sometimes I like to hear from real consumers. So if you're one of them, make sure to post on the comments. Some bullish sentiment. Let's talk about some good things about Apple, right? They're really focusing in this Apple TV and the streaming market. They're trying to they're getting new talent into their shows, and there's stuff. I personally have not watched Apple TV, but my brother, he's constantly telling me, hey, there's some good shows here. Here's my login, and check some of these out. So Apple looking interesting, down 11.2%. Next, we're going to take a quick look at Netflix. Netflix was down to 1.6%, but Netflix is almost at its all-time highs. This one from its 52-week high closing is only down about 1.6%. So Netflix has recently seen a lot of great publicity due to its success in Squid Game. Squid Game is just blowing up like crazy. It's doing amazing. We've even seen analysts increase their price target due to a huge success of Squid Game. I do want to say that's kind of, in my opinion, it's kind of making the stock price to perfection. Their earnings are coming up, I believe, October 20 something are their earnings. But I believe with this kind of talks of upgrading price targets, of the success of Squid Game, it's kind of creating the stock price to be priced to perfection in forms of earnings, right? I believe a lot of investors are saying, hey, Squid Games is doing good. I do agree, one great streaming show can drive new customers, new subscribers to that platform. So I believe many investors are expecting a beat in subscriber growth. If they do, that's going to be great news. Unfortunately, if they don't, or they barely meet expectations, I believe the stock price might see a bit of a decline. I believe investors are also expecting a better full 2021 guidance. If we take a quick look here, right, 2020 was the strongest year for Netflix in forms of subscribers. 2021 is the weakest since 2017, but it's because of that rubber band effect, right? They said they got a lot of the front end of 2021 on 2020, which is kind of causing 2021 to be a slow year for them. So definitely I want to say this is stock price to perfection right now. Out of all of them, I want to say this is the one I don't like at the current prices right now. The final one I want to take a quick look at is Microsoft. This was down 2.07% on the day. I think this is insane, right? Huge companies, $2.13 trillion market cap, was down 2% on the day. And I don't think volatility is done yet, right? I think volatility is going to continue for the next 2 weeks or so. So right now, I'm personally just keeping an eye on things. Might nibble here and there, but not something to really just grab my cash bag and use it all at once to buy this dip. I kind of like to nibble here and there. But Microsoft, right? I want to say very similar to Apple, with holiday seasons coming up. Holiday seasons tend to be a great time for Microsoft because of all their equipment, all their hardware, laptops, their computers. But because of chip shortage, I wonder how that would affect the company. So that kind of uncertainty could be creating some form of buying opportunity on the stock. If we take a look at their most recent earnings, which ended a few months ago, we can see they had overall revenue growth of 21%. Productivity and business process was up 25%. Intelligent cloud was up 30%. More personal computing was up 9%. Let's start with the overall intelligent cloud. Intelligent cloud, this was up a nice amount, mainly due to overall their server products. And we saw Micron Technology report their earnings, I believe last week or 2 weeks ago, and they say that demand on cloud is still super strong. So I'm gonna expect intelligent cloud, their intelligent cloud server, to also be up a nice amount this upcoming quarter. If we take a look at productivity and business process, I mean, a lot of companies are still doing hybrid style. A lot of companies are still coming up, increasing employee counts. So I believe the amount of seats in some of these office commercial products and these office consumer products are increasing. So I don't see much of a decline here. And finally, there are more personal computing, which includes things like gaming, like devices, like Windows. Again, holiday seasons turn to be a nice quarter for them. That's not this upcoming quarter. That's the next upcoming quarter. But things to keep an eye out, right? Right now, we do see a nice amount of pre-orders coming out, and then the upcoming quarter is going to be where they do a lot of bulking of consumer buying. So I do think all these companies are looking a bit interesting right now with current price decrease. If we take a quick look at forward PE ratio right now, so forward PE ratio 1 year from now, we can see the cheapest is actually Apple. I do want to say out of all of them, they're all kind of, none of them are really screaming super buy or super expensive, in my opinion, except Amazon. So Amazon is this purple one at 47.63. Even though it's the highest out of all of them, you might be like, Jose, this has the highest forward PE ratio compared to all the other players. Why are you saying this is the one that's screaming buy? Because I don't really look at the numerical value. I look more at how it has been compared to where it's been in the past. And we can see 47.63. These are values kind of seen in July of 2020 and June of 2020. So this stock price has definitely been pretty quiet for over a year now, and a lot of investors were kind of buying into their growth that they saw during COVID. Now they're seeing, hey, maybe we overvalued it too much, so it's just been kind of in a quiet period, in my opinion, for over a year, and that looks super attractive. Everything else is a little bit higher compared to where they were just a year ago, so that's the only one. That's the only reason I like Amazon at these levels the most. I'm not saying the others are bad investments. It's just Amazon has the most attractive. If we take a look, Amazon sitting at about $3,200. This is a strong volume area. It's been in this trend. I really like Amazon at these levels. Apple definitely seen a nice pullback. It's not overextended. If I was bullish in Apple's, right now would be a time where I would do a nice dollar cost averaging. Same with Microsoft. Microsoft seems a little bit more overextended compared to its medium term moving average. That doesn't tell me that stock price is going to continue to go down, but to me it tells me there's a little bit more risk at the moment, right? Volatility can continue for all these stocks, and stock prices can continue to go down. The final one is going to be Netflix. Like I mentioned, Netflix is probably my least favorite in form of price point. I believe with the overall huge success in Squid Games and price target upgrades, this is a stock price to perfection. It doesn't mean that perfection is not going to be met in earnings. It just means to me there's a little bit more risk at these price points. But most of them, if I ever wanted to enter, I would still enjoy that dollar cost averaging method. So I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.